All right, good afternoon. Give me just 1 second while I get the computer up and running. Okay, so good. Pleasure to be here. My name is Simon O with a company called Advantage CDC. We are headquartered in Long Beach. We specialize in SBA 504 program. So 504 program, well, no. So first, I wanted to kind of talk about the history of a SBA 504. This loan program actually goes back to 1958. They had, back then the economy was going through a recession, high interest rate, high unemployment rate. So banks weren't lending, and government lawmakers wanted to help promote lending and kind of force banks to lend to business owners. So they passed a law called Small Business Investment Act, 1958. So in all, most importantly, created two things. So the act created a debenture program, and also certified development companies. So for the SBA 504 program, the money actually comes from Wall Street investors. SBA is not giving the borrowers money, that's where the money was coming from. So SBA is issuing a debt instrument guaranteed by SBA, and investors buy it. They get the money from the investors and make it into a loan. To take care of all that paperwork, they created what's called a certified development company. So SBA defines CDCs as in-community representative of the SBA. So I am a CDC, Advantage CDC. So they did basically, SBA didn't want to put me on payroll. They rather create CDCs, do all the work for them, so they can go ahead and approve, manage, and facilitate the loan. So as a CDC, we handle the complete lending process for the SBA. So we work with borrowers, we collect documents, we package, we process, we close, and we service the 504 loans. And the CDCs are regulated and certified by SBA. So that was the two most important things, debenture and CDCs. So SBA 504 program, 9 out of 10 times it's used for commercial real estate, for owner-occupied, for business owners. If instead of paying rent, you want to buy your own real estate. A lot of the times it gets used to buy warehouses, offices, however you want to do it. So minimum down payment requirement is 10%. So it's small injection for to buy real estate. And there's two portions of it. We partner with a bank. So they come in, offer a 50% loan, and SBA comes in and offer 40% loan. Now for the down payment, if the property that the borrower is buying, if it's considered a special use property or a startup, it's 5% more, 15% down payment. And if it's special use property and a startup, it's 20%. So special use property is car wash, gas stations, and refrigeration facilities where the use of the property is restricted. And startup is considered any business less than 3 years revenue. So that's kind of a general structure of how the SBA 504 works. But on the next slide, I want to take a little bit deeper into the process. So if someone wants to buy $1 million warehouse, CDC, I will get a approval ready from the SBA. I'll do all my work and I'll get the loan approved. I'll have SBA authorization. Borrower will come in with the appropriate down payment, 10% in this case, and the bank will offer two loans. One is a permanent loan, that's the 50% that's permanent, and a bridge loan or temporary loan for 40%, and we'll close escrow. Buyer will take over ownership, take the keys, however, and celebrate, but the CDC will continue to do the work. We will complete the documentation, we'll submit to SBA, and SBA will pull all the loans that was funded that month, sell it to the secondary market, the investors, get the money, and pay off this bridge loan, the 40% loan. That process takes about a month or two. And when it gets paid off, the CDC fees get automatically added onto the loan balance. So, they have to make the down payment, club pay for closing and escrow, so at least you don't have to come up with additional fees. I just mentioned the fees. A few fees on the bank portion. 0.5% of the loan amount SBA collects as a participation fee. The CDC loan fee is 2.15% automatically added to the loan balance. That 2.15% is set by the SBA. So, it's kind of nice for me where I don't have to deal with negotiate on fees. I don't have the capabilities of. And closing attorney fee. CDCs they use a specialized outside attorney that specializes in closing documents. So they charge anywhere from $3,750 to about $5,500 right now, and a few miscellaneous fees. So this is basically the chart. Same exact thing I just spoke in a chart. So you have an understanding of what's going on. Bank may have, under the origination fee, depending on the bank, they may charge anywhere from nothing to 1% of the loan amount on the first trustee portion and the bridge loan portion. And that's kind of the fee in a nutshell. And interest rates, again, this is, so for all the loans that was funded nationally, and SBA determines the rate. So, everyone gets the same rate. And it's announced first full week of every month. And the June rate was actually announced this Thursday. Once the rate is determined, the rate is fully fixed and amortized. So it's a 25-year fixed. And then the rates move along with the 10-year treasury rate. If you're familiar with investments, 10-year treasuries. So the June effective rate that was announced 2 days ago, it was a 6.35% for the 25-year fixed. I mentioned debenture. So debenture rate is 5.04 and note rate is 5.09. Okay, so debenture rate is what SBA pays the investors every 6 months, and note rate is what the borrower pays SBA every month. So there's a 6 months and a monthly payment. So that's a small difference. 10-year treasury rate was 4.31 with a spread of 0.73. So the reason between the note rate 5.09 and the 6.35 is they collect ongoing fees included in the payment. So again, 6.35 25-year fixed. It's a including all fees, it's still a pretty phenomenal rate. And prepayment fees on the so this is all on the 40% of it. The 50% bank has their own details of it, but so the 40% of the loan, the SBA loan, prepayment penalty follows for 10 years, and it's based on the note rate. So if you pay it off during the first year, it's 100% of 5.09, so 5.09. Year 2, it's 90% of 5.09, 80%, and it goes on. And after 10 years, it goes away. And monthly payment, it consists of ongoing fees, principal, and interest. And SBA requires automatic payment, so you don't have an option on that. And you can't make any additional payments on the SBA portion. And once everything's done, borrower's going to end up with 2 payments, one to the bank, one to the SBA. Sometimes SBA requires a life insurance policy assigned as a collateral in a key man situation where the owner is the business. So if anything should happen to the owner, the business kind of folds. So then they require life insurance. Sometimes the appraised value comes in lower than the purchase price. Then we may have to get life insurance. We need appraisal and environmental report, so we order once, the bank and the SBA can use it all both. An attorney opinion letter for entities, if you have a corporation outside of California, that's something we may need. And one thing cool about SBA 504 loan is once approved, it must be dispersed within 48 months, meaning approval is good for 4 years. Bank loans on the bank portion is usually good for 90 days, 60 days, but it's good for 4 years. So if the plan kind of put a hold on it, hey, it's good for 4 years. Okay. Oh, so fun stuff. Maximum SBA limits. So maximum SBA loan limit is $5 million. So there's 7A program and the 504 program. Maximum 504 debenture limit is $5 million. So that 40% of the loan is $5 million maximum. And if you have a 7A loan, it all kind of mushed in together. Since the 40% is $5 million, SBA 504 loan can finance projects much bigger, like about $12 million, $13 million purchase price. So it's kind of structured, designed for larger property types. But for small manufacturing companies, so SBA really kind of specifies for NAICS code. So it's an industry code identified and listed on the business tax return. If it starts with the 31, 32, and 33, and truly it's a manufacturing where everything gets done within the United States, the maximum loan amount increases to $5.5 million, and it's per project. So you can get as many 504 loans you can afford using this special feature for small manufacturers. Next limit is green energy. So if the $5 million is up, you want to buy another property, but you don't have any more. If you find ways, so for projects where if the property generates 10% of the electricity or saves 15%, they can do $5.5 million again. And it used to be a $16.5 million cap on it, but they just removed it last month. So again, green energy project, you can get as many as you want, as you can afford. And so advantages of the 504 program, it's low down payment. Hold on to working capital, put less money into real estate, and hold on to cash and reinvest it back into your business. And fees are added onto the loan, provides a fixed rate long-term funding with fixed monthly payment and no balloon payment. So you don't have to refinance for 25 years. Then no additional lien on personal residence. Some SBA loans require additional real estate collateral, but 504 it doesn't. And able to finance larger projects anywhere from $12.5 to $13.75 million projects with 10% down payment. And most importantly, become landlord, build equity, build generational wealth. So we try to do our business. We try to educate our customers, help business owners pre-qualify, provide proactive updates, and and approval from CDC SBA generally opens up options with other banks. So if you want to look into other banks, that's something we can help to our borrowers. So Advantage CDC, my company, we've been around since 1979. We are a non-profit organization. I mentioned we are authorized and regulated by SBA. We are a in-community representative considered SBA. We have a small group of experienced, seasoned lenders and processors. We try to keep things simple. We speak quite a bit of language. We speak English, Spanish, Korean, Punjabi, Hindi, Cambodian. So if you have a need, we can definitely speak your language. And we are a direct lender for the SBA 504. There you go. Okay. Questions?
Thank you, Simon. Just quickly, I have one question,
Yeah.
Simon. So for the SBA 504 loan, basically it's more directed to a U.S. lender that does manufacturing and all of its operations directed within the U.S. Am I right? If
Well,
you have a manufacturing plant outside of U.S., then that could be a.
if it's a U.S. corporation,
Uh-huh.
they all
Manufacturing is
qualify.
overseas.
If they import, if they're a distributor, we can still finance. But it'll be under the regular 504, not the small manufacturers program.
Gotcha.
And I mean, we deal with a lot of imports, distributors from overseas, and those, we can finance. Start with the $5 million. If they truly need additional facilities, we can do the green energy program,
Right.
and continue on from that point on.
Great. Thank you.
Thank you.